In today's series, we will share with you more about my views of the aviation industry in Singapore by focusing on our national carrier, Singapore Airlines. I believe most of you have at least taken Singapore Airlines or Scoot at least once in your lifetimes and found it to be a great experience flying with them. SIA's mission has always been to provide high quality air transportation and services to its customers. With the leadership of Mr. Goh Chun Pong, I believe that the airlines has indeed hit its mission objectives time and again, bringing the brand to become one of the top names in the airline industry. SIA has won many awards over the years, including the prestigious Skytrax, making SIA the world's best airlines in 2023. Many of you may think, since SIA has a strong monopoly position in Singapore, surely their business will continue to grow, and therefore you would see share price move above $10. In this video, I will deep dive and look into 3 business indicators to share with you what I really think of its business outlook. Hello everyone, welcome back to STA Club, the club for stock trading and analysis. This channel is dedicated to providing you with high quality tutorials, guides and insights that demystify the world of trading. Join us as we will share with you more trading secrets and valuable insights. To stay updated and be the first to access these valuable resources, hit the subscribe button now. By subscribing, you're opening the door to a world of trading and maximizing your potential for success. Before we dive in, here's a quick disclaimer. The information in this video is for educational purposes only. It's not a call to buy or sell. Let's take a look at indicator 1, the continued rising operating costs of the company. SIA first quarter 2024 results released on July 31st, 2024 indicated a continued healthy demand for air travel, despite a slight quarter-over-quarter revenue decrease. Year-over-year, however, revenues have increased. Net profit experienced a sharp decline of 38%, falling from Sing dollars 734 million to Sing dollars 452 million today. Increased competition, pressured by passenger load factors, caused net fuel costs after hedging to rise only a small 1.4%. Notably, the first quarter 2024 passenger load factor remained robust at 86.4%, while SIA's low-cost carrier Scoot saw load factors decrease 2.7% from 91.7% to 89% in the first quarter of 2024 when compared to the fourth quarter of 2023. Aside from the passenger travel business, SIA's cargo load factor remained low but stable at 57.7% in the first quarter of 2024. However, when we compared to its load factors in first quarter of 2023, the numbers indicate a significant improvement. As we examine the group's primary business segments in terms of operating profit, year-over-year, the comparisons reveal a significant decline. The full-service carrier business experienced a 36.5% decrease in operating profits, while the low-cost carrier business suffered a substantial 89% drop. Only the engineering arm demonstrated a notable improvement in operating profit. However, the engineering business's revenue contribution to the group remains relatively minor. There are 2 main contributors to SIA's operating costs. The first is fuel price concerns. Fuel expenses constitute one of the largest operational costs for the airlines. SIA's net fuel costs rose to $1.37 billion in first quarter of 2024, mainly due to an increase in fuel prices and higher volumes uplifted. This substantial increase in fuel costs has had a significant impact on the airline's profitability. Even though fuel prices have moderated in recent months, they remain at elevated levels. The volatility in fuel prices poses a considerable challenge for SIA to maintain its profit margins. The second concern is inflationary pressures. Inflation has a widespread effect on various aspects of SIA's operations. Labor costs, a significant expense for airlines, are subject to upward pressures as employees seek compensation that keeps pace with the rising cost of living. Additionally, supply chain disruptions have led to increased price for aircraft parts, further straining the airline's finances. These inflationary pressures compound the impact of the pandemic across the aviation industry. The rise in costs is indeed reflected in the last Q1 earnings report for 2024. Expenditure of the group rose slightly by 1% quarter-on-quarter and 7.7% if compared year-on-year. The rising operating costs have had a noticeable effect on SIA's profit margins. Despite higher revenues, the company's operating profit fell by 38.4% to Sing dollars 452 million, primarily due to rising operating costs. This significant drop in profits, despite increased revenue, highlights the challenges SIA faces in maintaining its financial performance. The airline industry continues to contend with heightened competition, supply chain constraints, and inflationary cost pressures, all of which put pressures on SIA's profitability. Let's now look at Indicator 2, Increased Competition. Singapore Airlines has experienced a decline in passenger yields due to intensifying competition. In the June quarter, the yield, which measures the flight profitability, fell by 4.6% to 10.3 cents per kilometer from 10.8 cents a year earlier. This decrease in yield has had a significant impact on SIA share prices, as it directly affects the airline's profitability and revenue growth. The decline in passenger yields is also partially brought about by increased competition. The air travel industry has become increasingly competitive as airlines worldwide expand their routes and flight frequencies to meet the robust demand for travel. Together with the introduction of the low-cost carrier industry in the aviation business, this surge in capacity has led to heightened competition, putting pressure on ticket prices and squeezing airlines' margins. For Singapore Airlines, this competitive landscape has resulted in a moderation of passenger yields, particularly as other carriers progressively restore their capacity. The intensifying competition and yield pressure could have long-term effects on Singapore Airlines revenues. While passenger demand remains healthy, supported by strong forward bookings to North and Southeast Asia, the airline anticipates that passenger yields will likely moderate due to increased capacity from other airlines. This trend may continue as more capacity enters the market, especially in the Asia-Pacific region. To address these challenges, Singapore Airlines will need to monitor market trends closely and adjust its capacity and network accordingly. These factors may have a lasting impact on SIA's revenue growth and consequently its share price. Finally, let's look at the final indicator, geopolitical tensions. The aviation industry faces significant challenges due to geopolitical tensions and economic uncertainties, which have a substantial impact on SIA's share prices and the company's future outlook. These factors contribute to a volatile environment that affects air travel demand and operational costs. The major two concerns with geopolitical tensions are the ongoing conflict in the Red Sea that has caused major disruptions to global shipping routes, with a ripple effect on air cargo demand. This crisis has led to a 67% decrease in container ship transits through the Suez Canal, a crucial waterway for global trade. As a result, air freight demand has risen, putting pressures on capacity and potentially leading to significant price hikes on major trade routes. This situation could affect SIA's cargo operations and revenue growth, influencing investor sentiment and share prices. The global economic landscape, too, presents a mixed picture for airlines like Singapore Airlines. While there are significant signs of recovery in some regions, others face challenges. The Middle East is forecast to have a more favorable economic environment in 2024, despite geopolitical tensions. However, slower realized and potential GDP growth in major economies could impact air travel demand. These economic uncertainties may lead to fluctuations in SIA share prices as investors assess the company's ability to navigate these challenges. The ongoing wars in Ukraine and the Middle East have the potential to restrict airspace and international operations. Additionally, new climate policies could also dampen the growth in the demand for air travel over the coming decades. These risks, combined with potential economic slowdowns, may create volatility in SIA share prices as the market reacts to the changing travel patterns and regulatory environments. In conclusion, the analysis of SIA share price reveals several key factors that have an impact on the company's market valuation. Rising operating costs, increased competition, and geopolitical uncertainties all play a role in shaping investor sentiment. These indicators suggest that SIA current share prices might have limited upside potential, prompting investors to carefully consider their positions. As the aviation industry continues to face challenges, SIA's ability to navigate these hurdles will be crucial to its future performance. While the demand for air travel remains strong, the company must adapt to the changing market conditions to maintain its competitive edge. Investors should keep a close eye on these factors to make informed decisions about their SIA holdings in the ever-changing landscape of the global aviation market. Based on my discounted valuation model analysis and using a risk-adjusted expected return of 12% for SIA, a terminal growth of 2% for the airline business due to its cyclical nature, I estimate an intrinsic value for SIA at $6.73 today. This intrinsic value has only a 3.5% upside from its closing price of $6.50, which to me is indeed a low risk-reward ratio due to the huge potential downside risk and limited upside gain. Considering no further upside growth surprises in its 2024-2025 financial year because of its challenging outlook, as passenger yields and rising costs continue to come under pressure, I will place a sell call on its shares at current market prices. Therefore, hope you enjoyed today's stock pick series and see you in my next episode. Goodbye.